Hey everyone, welcome to the KE Report, a daily editorial with Dave Erfle. Dave is the founder and editor of the Junior Miner Junky. Dave, we're not going to talk so much specifically about what you're doing within your portfolio. We'll cover some of the headlines within the gold space, starting with Barrick, one of the largest miners out there, talking about moving to the US, domiciling into the US so that they could list on the S&P. There's only one other major miner on the S&P, that is Newmont. And I think this is really just following a trend that we've been seeing globally where money is concentrated in US stocks. These stocks in themselves are global, but the money that's available and the investors that seem to invest even more than anybody else in the world seem to be in the US. This move makes sense to me if Barrick is to do it. I don't know all the moving pieces that they would have to do to actually move to the US and then list on the S&P, but it seems to me like this is a good idea for the company, could even bring some more eyes into the sector. But Dave, what's your thought on this potential Barrick move to domicile in the US and then list on the S&P?
Oh, it's a great idea. I mean, look, it's all about attracting more investors, especially attracting more US investors into your company. Because if we take a look at the volumes in the GDX and GDXJ during this recent move, they're still very low. It's telling you that retail is still really not interested in the mining sector, even though the gold price continues to make these all-time highs. I mean, we're $50 away from $3,000, and it's which is acting like a magnet. So it makes all the sense in the world, especially all the troubles that Barrick is having in Mali. They just broke off talks with the Mali government here, and they're trying to shift attention away from that, I would imagine. And it just makes sense because, it's going to trigger more purchases from it's going to trigger automatic purchases basically from mutual funds and ETFs that attract the index, especially from US investors. And that's what it's all about. I mean, that's why these companies need to get bigger also. They need to attract more investors, get more liquidity into their stock. They know what they have to do, and they're finally starting to do it as far as M&A, getting bigger, buying back stock, fixing their balance sheets. There's, this is just another idea and a long line of ideas to attract more attention to the sector.
Yeah, Dave, you nailed it. And I think that we were talking off mic about the companies that are attracting the bid, that are outperforming, that are hitting 52-week highs, or some of them even hitting all-time highs, are the companies that are growing through acquisition or they are growing through building mines. When you look at companies, and we've talked about this before, like Kinross has grown because they acquired Great Bear and they're getting it closer. And you look at K92 and IAMGOLD and Calibre, and you're looking at companies that have grown through acquisitions or through building mines. Equinox getting Greenstone built, IAMGOLD having gotten Cote built. That seems to be where people are flocking. When you look at the GDX, though, it's a stark difference. You look at GDX, it can't even break above its 2020 high, and now we have way higher gold prices and way higher margins. So should the message to the industry be growth?
Absolutely. Especially now that they've fixed their balance sheets, what's the next step to do is to grow and get bigger and attract more investors, get and more liquidity into their stock. And I think that's already starting to take place. And I think it's really going to start ramping up once the gold price gets over $3,000. I mean, we're getting more and more attention to the gold price, and that attention needs to shift down into the mining space.
Well, and that's the biggest question, right? Why would investors go down and buy individual companies, taking on that company risk if they simply like the gold price? We have so many ETF products out there where people can play leveraged gold products and not take on that company risk. Look, it's something I've been saying over the last few earning seasons is that it's great that these companies are recording record revenue numbers and even some record earnings, but they're not following it up with increased production. And I know that bringing assets online is very difficult. Yes, they could go out and buy producing assets. Those usually are at a premium, but that at least immediately adds to the bottom line of companies. Or they could further develop projects. Dave, do you see any motivation, though, by these majors to speed up any development of the assets already in their pipeline, or are they even able to do that?
Yeah, I mean, the motivation is coming from their shareholders. I mean, this is what happened back in, during the last bull market, but they concentrated on the wrong assets, right? They concentrated on low margin bulk tonnage projects just to get more ounces on the books. They learned from that lesson. So now they need to add more quality ounces. And to do that, they need to basically go into the M&A and start buying, start merging with other companies and get bigger. And these mid tiers, which are taking a page out of that playbook, they're, as Shad just mentioned, they're growing by adding more assets and, on Bay Street as opposed to trying to do it themselves with exploration. It's a lot easier and quicker to add ounces that way in mergers and acquisitions. And we're starting to see more and more of that. So I expect that to continue.
Well, and Dave, we also just saw Newmont divest a lot of its non-core projects, but the companies that pick those up are doing the same thing. They're buying producing assets to grow. Look at the success we just saw with Discovery Silver, picking up the Porcupine Mine Complex, several different mines and some development projects, but they go from a silver optionality play to a gold producer overnight, and they immediately get re-rated higher by the marketplace because investors loved it. Should we see more Junior say, hey, if you're not going to acquire us, we'll acquire you. We'll acquire the producers. Should that be the model people are looking at?
Yes, absolutely. And what you should be looking at now, if you're a speculator in this sector, is putting your CEO hat on of a major or a mid tier looking for growth. What are the most attractive assets out there right now that look like they could possibly become acquired at a really nice premium? But on the flip side of that, as far as my subscribers and I are concerned, we hold a lot of companies like that in the portfolio. We don't want to see them get taken out too soon because we'd like to see them grow on their own first to get a lot for the market cap to grow a lot higher before that premium comes in. I think we have a really good chance to do that. Of course, if a couple of them get taken out too early, that's okay because we still made money and we can always rotate that into something else on my watch list because my watch list is chock full of other ones that I'd like to get into that still need to be re-rated.
So, Dave, when it comes to these majors, then potentially using some of their cash, look, they can be major drivers in the sector. That's what brings in the generalists, are these major companies. And again, I think focusing more on growth because, look, as much as we want growth, I think that brings in investors. If investors want value, well, then these companies need to pay higher dividends. They're not doing that. So go out there and spend this money, but these companies have gotten quite large, market cap wise, even production wise. What does move the needle for these large companies rather than simply divesting assets or these gold companies looking at copper projects in terms of the gold space? How big do these assets need to be to actually make a difference for the majors?
Yeah, that's the thing. They need to be really large, and we're starting to see that. I mean, I saw the headlines today. A couple of executives from Lundin and Glencore are put together a shell to start acquiring large copper assets. They see the opportunity out there, and I think it's going to start happening. Where you're going to start seeing consolidation more in the copper space too, because you're seeing the copper price really start to take off and getting closer to that magic number of $5 a pound. So you also heard recently of a major merger in the copper space where they were talking. It was I forget the two companies, BHP and another company. They were speaking of a big merger, but they know what they need to do to attract more investors. And I think they're really going to start doing it, especially now with Trump in the White House. I mean, as far as permitting is concerned, it's completely done a 180 from basically stifling all these projects in the US, keeping them in major red tape before they can get permitted. And the first thing he came out and said, one of the first things he came out and said was, if you're going to spend $1 billion capex on your project in the US, your project is going to get fast tracked through permitting. And then Idaho has come out with this speed bill to fast track permitting more. I think the NEPA process probably has a chance to be fast tracked more. So, this is huge for these companies that have done a great job, these developers that have done a great job in de-risking their projects and coming up with, all these ounces that are sitting in the ground and doing their level best to basically limit dilution while doing it. and they're sitting in the catbird seat, sitting on all these ounces. And now the right government is in place to start tracking this permitting process. And you're seeing a lot of these companies that have done that start to get rewarded by resource speculators because you've seen a lot of strong moves in a lot of these stocks already.
Yeah, Dave, it's going to be interesting to see if from the federal level or even at the state level, if a lot of the key states for mining in the U.S., like Nevada, Idaho, Arizona, Wyoming, can really move things along. Just another question on M&A, though. There has been the trend over the last 5 to 7 years of the majors acquiring each other, and they became super majors. Barrick got Randgold, and Newmont grabbed Goldcorp and Newcrest, and Yamana was scooped up by Agnico. And we have seen some of the majors go down and buy development projects. We just recently saw Agnico take out O3, and we saw Goldfields take out Osisko Mining, but not as many as people want. So are people looking in the wrong area? I keep asking this question, but there's only so many majors. There's a ton of mid tiers. There's a couple dozen. Shouldn't they become the new majors? Couldn't we see more mid tiers joining with other mid tiers to become the new majors? And if they did that, that's not really going to filter down to the juniors that people are hoping get picked off the shelf. So what are your thoughts there?
Well, it all depends. And, I've seen a couple of mergers between single asset companies that basically they both had the same problem. And now they have two projects with the same problem. And that's basically attracting investment capital, attracting a strategic partner to move their projects forward with the capital necessary to do so. Merging just to get bigger, ju- just for the sake of getting bigger, doesn't always make sense. These deals have to make sense. What I'd like to see more of is some of these single asset developers do something like Discovery just did. Go out and get a producing mine. And you've seen that from a couple of companies, and they've been rewarded. Like Heliostar is an example. They went out and they got a couple of mines on the discount rack in Mexico, and their stock I think has almost tripled since they've done that. So I'd like to see more of that because that's what these speculators want to see. They basically want to see a way that the company can start paying for their G&A while they're waiting to get these permits to build these projects. So if you've got a producing mine producing free cash flow that's going to cover your G&A while you're waiting, that's a huge plus. And the companies that have done that, they've really been rewarded already. And I think there's a lot more upside to the stocks and the companies that have done that.
Oh, there have been some great stories out there where companies have made some fantastic deals over the last couple years when larger companies, even mid tiers, have been looking to divest or get out of different countries. And they've simply just offloaded their projects. And now, with the higher metals prices, these companies have picked them up. They are cash flowing. That's a huge stepping stone for a lot of resource companies because a lot of these resource companies just churn through cash without actually earning anything. But now this higher gold price definitely helps these companies out. Dave, what about these smaller producers then? Usually these smaller producers are in somewhat sketchier jurisdictions. They have shorter mine lives. They still have relatively small market caps. Do you see them as either being able to acquire other projects or them being, again, those takeover targets for these other development companies that need that cash flow just to cover their G&A and wait for the developments of their bigger assets?
Yeah, I mean, if they're in a jurisdiction where there's companies around there like that are looking for a mine that's throwing off free cash flow that has, a decent all-in sustaining cost and not necessarily has major growth in the mine, but enough to maybe cover their G&A for the next couple of years to do that, absolutely. But that's not something I'm looking out to invest in right now. I'm still looking at things that are big, that majors or mid tiers are looking to acquire that are basically under the radar of the market right now because you know over the past month or so a lot of these stocks aren't really under the radar anymore. They've moved a lot, and even though they're still good value, they've moved quite a bit. So you don't want to get into something that's already had a strong move and chase it. You still want to look for things that are still under the radar that the market hasn't discovered yet. But basically, my subscribers and I have basically been in be right, sit tight mode. We've already done the accumulating of the stocks that we want to hold right now before the herd gets into this sector because I mean they're still not here yet. So by the time retail gets into this sector, I expect a lot of the stocks that I own and that I hold for my subscribers and recommend to my subscribers that have already moved, I expect them to move a lot higher even before the retail gets into the sector because they're not even here yet.
Well, and that's the other consideration is that, look, there is money coming into this sector and there are a lot more stocks doing better. I know there's a lot of people that think they've missed out on some of these moves of stocks that have gone 2, 3x just in the last 12 months, not even 12 months, really since that breakout in March. So I think that there are still a lot of stocks that have done well. A lot of people out there complaining that the whole sector isn't moving. It's just not true. There are a lot of good companies that have gotten rewarded by the market, but it hasn't filtered down to a lot of the juniors. That's because that's not where the action has been. So right now, it's a producer's game. If you're producing gold, you're making money and you're benefiting on the share price aspect of it. I know everyone wants their share price to be higher, but quite frankly, there's a lot of success stories out there right now, and those have continued to be the outperformers with a few more sprinkled in newer companies starting to get some money. So it's all a process that we're seeing here, but overall, again, it's a producer's game and a very advanced developer's game, but only if you have access to capital because there's still way too many simply so-called development stories out there. Dave, we'll wrap it up here. It's always great chatting with you. There seems to be a lot more to talk about in the resource sector. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Click that link in the show notes to visit Dave's website. Dave, thanks as always for your time.
Thanks, guys. Always a pleasure.